Perfect. Can one of you guys confirm for me if it's working on YouTube, please?
Yeah, one sec, I can check.
Perfect, thank you.
Yeah, it seems to be live.
Alright, perfect. Alright, let's go ahead and get started. So today we're going to focus more on taking the entries, so how to take the entries, the different confirmations across time frames, and also the risk management. Is there anything else that you guys want to specifically go over today?
That would be perfect for me.
Alright. Anybody else? I thought I heard someone.
Oh no, that was me saying that. That seems good.
Okay, perfect. So as always, let's take a look at the weekly time frame. So what are the support and resistance levels that you guys see here that you would mark off first? So what level needs to be broken right now in order for price to be headed up to the next level? Yep, so we need to break these levels first if we are to continue pushing bullish. So I'm going to mark off this level right here. So as soon as price breaks below this level, this weekly candle is also going to flip bearish, and then we can start looking for potential sell opportunities coming back down for a wick fill here. So that's the first level that we need price to break below if it is going to continue pushing down. And then for any buy opportunities, we need price to break above the current high that it's sitting at, the candle high, and then we can look for potential buy opportunities coming back up to this wick fill. Any questions about this before we go ahead and move on? Alright, perfect. So now we're going to go on to the daily time frame. So what's going on here on the daily time frame? I'm going to adjust it right up top here, and then I'll ask you guys a question about it later. So what's going on the daily time frame? What's the structure like?
Seems like we're
uptrend.
What's that?
We're in an uptrend.
We're in an uptrend?
I think so, for the daily. Correct me if I'm wrong.
This is consolidation here, right? Because price isn't really breaking above any resistance or support levels. Right?
And with all the wicks, it's grabbing liquidity.
Yeah, so these are this entire zone. Price never really closed below it to continue down, right? Instead, we kind of just started printing side by side here. We tried to break out of it one time. We made those top wick rejections and we pulled right back down into the support area. After that, we haven't really broken above it, have we? So that's your support zone that we see price tapping into for liquidity grabs. So every time price does come back and tap into this, we could look for potential support for more buy opportunities. Another level that we can see price kind of resisting off of is right here, right? What's happening at this level? How are the candles closing? How are they reacting?
they're breaking lows and highs.
The candles are closing right at the level and then doing what?
Oh, they're rejecting that level.
Yeah. We try to break above it again, but we come right back down. Right into the support area, we push right back up. Again, we try to break above it, reject it, and close below this area. Same thing here. So what does that tell us about this entire zone?
Apart from it being consolidation?
Yes. What is the market doing right here in this zone?
Oh, collecting orders.
Collecting orders.
Right. So if you're going to look for any buy opportunities, do you have a range here? Let's say even for a scalp?
No.
Why not? You can't scalp this?
That's the daily. Sorry. Yeah, we can.
So you can scalp this, but this is a limitation of your trade, right? So at this point, you should be looking to secure majority of your trade, and then you can let everything else run to see if it's going to come back up into this 1944 area up top here, and if we can end up getting some of these wick rejections again. Make sense?
Yes.
All right. And then if price rejects off of that, then again, you can look for sell opportunities. At that point, looking at the historic price action, we know that price is going to drop back down and come back probably into this area to grab liquidity again. Any questions?
No.
All right,
Not
cool.
for me.
Now we drop down to the 4-hour time frame. So what's happening on the 4-hour time frame here? I want you guys to start looking into some of these price action and candle details now. So yes, you have rejections, you have price trying to break the highs and the lows and everything like that, but really where are the candles closing and where they're telling you? So in this case, let's start off from the very left here. You try to continue bullish, we came back down, rejected right into this area, right? We held on to it as support a few times, finally grabbed that volume to break the previous highs, do a quick retracement, and then continue pushing back up. At this specific point is where finally price exhausted out and we start to see a sell-off happening. Even with the sell-off, as price started to break back down, you saw a quick little retracement. It pushed right back through this area of support. We fake out right at this level, right? How do we know it's a fake out?
Because it closes back in the range.
Right. So it tried to pull back down. So instead of retracing and then continuing to push back down, it pushes right back into that range. And then we start to see price react off of some of these levels, hold on to this area of support, and then come back up and tap right into that area that it had rejected previously 2 times, right? And then after that, we just continue to hold on to this area of support. So what's going on right now?
Consolidating in this area, rejection in the bottom.
Right.
19.
We are rejecting this area, exactly. Right? And we're starting to hold on to some sort of support right into this area here. So what we need to see happening in the next 4-hour candle or the next couple of 4-hour candles, even if we want to look for any sort of scalp opportunity, is some sort of a bottom wick here, and then the following candle or the current candle pushing back up bullish, breaking some of these highs so we can look for quick scalps coming up into this zone. Does that make sense for everyone?
Yes.
Any questions?
And sells potentially below that level, if any. Correct.
Right.
Yeah.
Cells coming right back down through this area.
Mm-hmm.
Everyone understand so far?
Yes.
Okay, perfect. So really, if there was going to be any other level that I would mark off, I'm just going to use the same level here. Instead of drawing on more lines, it would be right here. So what I want to see is price either respecting this area as support and then pushing back up bullish, or I want to see price breaking below this, so then we're coming right back down to 1919 at least. So right now, if we're looking for any buy opportunities, we have a range of about, let's say, 37 pips or so for a quick scalp on gold, or we have sell opportunities for about 70 pips or so. Of course, at either of these levels, you could let runners go, and then you could see if price is going to continue pushing. But at the moment, just understand what the limitations of your trade are going to be, and that's going to be both of these zones here.
So quick question. So since we're in a situation where there's so much indecision, and like how you just said, we could technically let runners go. Like I'm noticing in gold right now, currently, there's a situation where I feel like it could be 50-50. It could go up or it could go down. So leaving runners in those situations where it is 50-50, like it makes sense. Because like even if you know the limitation of your trade, like say it's a Monday or a Tuesday, a day that you would usually take a swing trade potentially, and then just kind of see where it goes until you have more confirmations. I don't know if that question was worded in the best way. Hopefully it makes sense.
So in that 50-50, start narrowing it down even more. So where does it make sense for price to respect certain areas and then continue pushing? So let's say if you were in an area like this, right? So forget like everything that's happening down here, like everything down here, right? So forget all of that, forget everything here that's happening. Let's say you're just looking at this. So in a situation like this, if price is pushing up bullish, let's say it continues pushing above these areas, then we know that a buy at least up to here makes sense, right? And then once price, let's say, breaks below these areas, that's when you start paying attention to whatever happened to the left here. That's when you pay attention to all of this. Okay, cool. So once price breaks below this, then I want to look for some sort of a retest, maybe like a bearish candle with like a top wick rejection or some sort, like this. And then as soon as it breaks the lows and continues pushing, then I can look for a sell trade. And at that point, a sell up to at least this point here or somewhere here makes sense. Right? So your entry isn't up top here. Your entry is still as price is clearing this minor resistance, but your confirmation is going to be that top wick rejection. Make sense?
And yeah, so then in that case, like we could potentially like, would you say it's safe to just close full around here or close partials, go risk free, and then see if by chance by the time you're off charts, if it continues to the next level that makes sense?
Yeah, because if there's enough bearish volume and you have the fundamentals on your side, along with the market open, market close, whatever volume, as long as it's not dead in the center of the market, you could potentially come down and fill these wicks, or you even have potential of maybe coming back and mimicking a move like this. But you should already at this point be completely risk-free. If your entry is going to be here and you've already tapped into this area, that's around 70 pips, right? That's what we measured. So you should already be taking, like, let's say 70 to 80% of your trade out. If all you're doing is scalping, taking 70 to 80% of your trade out and trailing your stop loss. Now you trail your stop loss to, well, where does it make sense? Maybe in this case, it only makes sense to have it at break even. Again, that comes down to your own risk management, right? Maybe it makes sense to only keep it at break even, so then price has enough room to retrace and then continue pushing down. Maybe you don't feel comfortable with having it at a break even and you're already happy with the trade that you have, but you're letting runners go to see if the trade will continue. So maybe in that case, your risk management strategy tells you to put it somewhere here. It comes down to your risk management strategy.
Cool. Awesome. And this level right here, did we draw it on this time frame? I can't remember from where
It was off
came
the
from.
daily time frame. I adjusted it.
Okay, got it. Cool, thanks.
Yep, for sure. Alright, so again, we have still that resistance here on the 4-hour time frame that we have marked off, which is being respected by a couple of different candles here as well. So you have obviously the first one right here, resistance, and then price tried to break above, came back down, showed us a lot of bearish momentum to the downside. And then same thing here, as price is kind of just consolidating, retracing into these areas. And then we held on to this little support of break and retest as price was breaking back down, and currently it pulled back up and is respecting that area. So if we're going to look for any sell opportunities, same way that I just marked it off right now, we're going to wait for price to continue pushing down. As soon as it breaks below this area and we get some sort of a top wick rejection and the candle starts moving back down bearish, we're going to start looking for some sell opportunities. But if this following candle, let's say it makes a bottom wick rejection here and it starts pushing up bullish, then we know that we have some potential buy opportunities. But for that, obviously we're going to drop down to the hourly, 30-minute, and all those different time frames and look for some confirmations of supports being formed. Make sense?
Yes.
Perfect. So now let's come on to the hourly time frame. So what's going on over here on the hourly time frame? What is all of this?
Consolidation.
Consolidate.
Yes. And then price broke above and did what?
It rejected this area again.
Rejected that area, pulled back down. Did it break any previous lows?
No.
No. Okay, and then price again pushed back up, and then right now the current hourly candle broke the highs and the lows, but did we break any of the previous lows?
Nope.
So do we still have valid buys here? Is the structure still valid?
I would say yes.
Okay.
Personally.
Are there any signs of a sell here, a potential sell?
Now with this candle that break the high and the low,
No?
no.
Okay. Would there be a potential sign of a sell opportunity if price were to continue breaking below this level that I just marked off with, like, let's say something like this? And then let's say another, top wick or something, and then continue pushing down. Would this be a potential sign of a sell opportunity, or would that be overextended move?
Could be a sign of sell if we break the previous low.
Okay, but would this be would you take this sell here, or let me give you another situation. Would you look for, let's say, a break and retest of some sort here? Let's say price, pushed up bullish, gave you some top wick rejections, came up and closed into that area exactly like this, and then the following candle is what took you back down. Would you take a sell opportunity right here, or would you take a sell right here?
I take the sell after the break and retest.
Okay,
Definitely.
and why is that?
After the break and retest, is rejecting the top of the previous candle, and it's continuing bearish.
So after price gives you a nice sell-off, you pretty much hold on to a support area, and then you see some of the buyers kind of kick in, take the price a little bit higher as you respect this broken support as the new resistance, and then continue pushing down.
Yeah.
All right, there you go. Are there any other levels that you guys would mark off here on the hourly time frame?
Not for me.
All right, anybody else? I would mark off this little zone right here to see if we're going to continue pushing below this. Yep, exactly. And if I extend that over, we start to see how price does react off of this level multiple times. So in here, in between, this little area between 1931 and this area right here, that's a no trade zone. If I see a support being formed somewhere here and price pushing up, then I could consider some buy opportunities right above that. So I could consider some buy opportunities up top here as price kind of clears above this area, but I need to see a support being formed here on the lower time frames. So on the hourly or on the 30-minute or the 15-minute, I want to see some support areas being formed here. If I'm going to look for any sell opportunities, I need price to continue breaking below this, potentially give me some sort of a retracement here, respect this area that price has been bouncing off of, multiple times, respect this area as some sort of a resistance, and then continue pushing down like that example that we had. Make sense?
Oh, yeah. Was this the no trade range or this
The
one
no
right
trade
here?
range is going to be this.
Oh, okay. And then in this case, since we had marked off like cells below this level, um, it would be valid if we were to see some form of break and retest somewhere around here simply because it's so close to this area to potentially take buys, like if it's a full body break and retest.
You can at least
Okay.
look for a scalp here, right? You could look for a quick scalp. Let's say you get a break and retest somewhere around here. You got a scalp of like 20 pips on here, right? But if you get a break and retest somewhere around here, then there's really nothing stopping you to continue down for 72 pips or maybe even 98 pips or 100 pips depending on your entry.
I see. Yeah, because sometimes I get stuck in situations like this where I know that my sell opportunity is right here, like the one that I marked off, that's where I want to more or less see price form some kind of break and retest. But then price might start showing like bearish momentum, for instance, around like a level of importance. And then I'm trying to be like diligent with my rules and be like, no, but I'm gonna wait around here, and then like it'll just end up going without me in some way. So yeah, sometimes I do get confused with that. So I'm trying to keep that
as a
in mind.
scalper, that's kind of where you have to learn how to pivot your strategy a little bit, right? Where if you get a break and retest here, let's say it happens right before you, right, while you're watching it, and you're saying that no matter what, this, according to my analysis, is where the sells are confirmed. Like there's for sure, once we break below this, we're going to continue down. If the break and retest has already happened here, that means you need to start evaluating, well, what if there's another break and retest, perfect, but what if I have to take an impulse trade here? How am I going to manage that? That's part of that continuous analysis that I talk about, right, that I've mentioned a lot of times to you guys, that regardless of whether you're in a trade or not, you still have to analyze your entry, you still have to analyze how you're going to manage your trade and all of that. Make sense?
Right. Yeah.
Does that answer your question?
Yeah, I'm sure I'll have some more questions that'll clear up at some point. More of it. Thank you.
Alright, so we got that on the hourly. We dropped down to the 30-minute time frame here. So what's going on here on the 30-minute time frame? What's happening specifically between 1931 and this zone?
Consolidate.
Yeah, consolidation. We have price reacting off of this area, right? You get a quick little break and retest, only to continue pushing down. And then same thing here. You get like a quick liquidity grab wick up top there, and then a massive sell off. We come back right into these areas here again, and then again you have another sell off. Rejection into this area, again another sell off to where? Back into this level right here. We try to break above it. We don't have enough volume. We come back down and tap right into this area here again, holding on to this as support. You got that quick little resistance, and then overall you have consolidation happening here. So again, does this confirm what we just saw in the 4 hour and 1 hour, or do you guys see something that's different?
Confirms it.
Confirms it, okay. So in order for you to look for a buy opportunity here, what do you need to see on the 30-minute time frame?
Break and retest.
A break and retest. What else?
Some sort of support forming.
A support forming, okay. What if there's an impulse trade opportunity? How would you take that?
To the upside?
Yeah, or to the downside.
I feel like to the upside seems kind of tricky the way that it's set up right now.
With volume.
What kind of candle setup do you need to see to the upside here?
If the candles started going bullish and create a bottom wick and continue pushing up.
So either a bottom wick here and then price starts pushing up, or it could have a deeper bottom wick rejection, right? Like right into these areas, something like that. Or what's another situation that we see sometimes when there's high volume?
The candle reversing.
Sometimes we won't see a bottom wick at all, right?
And
then price starts pushing up. What do you do in that situation?
Those ones are confusing sometimes. When they don't have any no even top or bottom wicks, they just go. It's like you don't know what to do in that case unless it close and created another candle, bottom with rejection here, and continue breaking the high here.
So it comes all the way down here, creates a bottom wick, and then starts breaking the high. That would be an entry that you would take.
Yeah,
okay.
That could be.
And then a third situation that we have seen in our simulation sessions is price pushing up. It starts fluctuating, maybe comes into an area of liquidity and ends up just leaving a top wick. So how do you take a trade on that?
Sell in that case, obviously.
What's that?
In this case, you mean how you take a trade for a sell?
For a sell or for a buy? How do you take a trade in that case?
After the top week, right?
So after price has made a top wick and it closed bullish like this, what does that candle tell you?
Buy still in control because there's no bottom wick.
Right. And so for you to take an entry on this candle or the following candle, what do you need to see?
If the next candle make at least a small wick or no wick at all, you should get into the trade.
So on a candle like this, you would take an entry?
Correct is right, yes.
And where would your stop loss be?
I would take it to the support, below the support.
Down here?
No, the support, which is by the left red, the red candle. Under the no, lower, sorry. This is the major support you have. No, the major support you drew.
This?
Yeah.
Okay. And then what would you target then?
My target will be to the left. That red candle, not to the wick, but which part is wick down? Oh yeah, right there. Yes, correct. Right here.
Perfect.
That was my time. Yes, correct is right.
So in order for you to have a stop loss, pretty much the reason why I'm asking you guys these questions is so you understand what your risk to reward is going to be like. I'm going to give you an example here. Whatever I draw in red, do not do, right? This is really going to mess with your account growth and everything like that. Do not take an entry somewhere up top here and then place your stop loss literally like right underneath that. Because the previous candle, no bottom wick, right? And then the following candle, no bottom wick either. Give it enough room to retest into these areas and then continue pushing up. In this case, right now it makes sense for price to come back into this area here specifically, and then let's say here for example, and then continue pushing back up. But once it breaks below that, then clearly we know that we're headed here. So maybe even instead of having your TP here, maybe you could have it a little bit tighter somewhere up top here where it makes sense from a structure perspective that if price were to break below that, then clearly we know it's coming here, right? Exactly to our stop loss. So you could cut your stop loss short. But what you shouldn't do is place your stop loss here and then place your TP like somewhere even tighter where you don't have a one-to-one, or place your stop loss all the way down here while your TP is like right there. You're legit sitting at a 0 or a negative risk to reward. Do not do this. What you should be doing instead is placing, let's say, your stop loss here, and then you can target, the wick fill up top here. That would probably give you a one-to-one, a good entry, or a good risk to reward while your entry is somewhere here, or place your TP here while you take partials here. Once price has cleared above this area and it continues pushing, then you move to break even at this point. Make sense?
Yes.
Perfect. Any questions so far?
So it is important either way to see a candle close to form support, correct?
Yes, you need to see a candle close.
And if for some reason the next candle just so happens to be quite big, would that like discredit
as long as we make a
bets?
bottom wick on that candle and then price starts pushing up bullish, I'm okay with that. But if we have like the last two examples that we just saw where price wasn't really making a bottom wick, I would want to see the first candle at least closing first and then leaving a range for the following candle.
Okay, so you would, yes, enter somewhere here if this was more or less the situation where we wouldn't necessarily know, like stop loss would be down here, this candle was this big, and then the next one did something like that.
No, my stop loss would not be that wide. If my entry was somewhere up top here, then my stop loss would probably be a little bit tight somewhere here. It would not be all the way down here.
Got it. Cool.
All right, and then on the 15-minute, what do we have? Do we have a support formed on the 15?
Yes, and we also have an indecisive candle there.
So what do we need to see here if we are to look for any buy opportunities?
It got to bounce off that support.
So respect the support, either give us a bottom wick rejection and continue pushing up, but regardless, the bullish volume that I want to see is price breaking the previous high right here and then continuing to push. If the price does not break the highs up top here and it kind of just fluctuates in this range, then that tells me that we could just end up consolidating like the previous candles here. Make sense?
Yes.
Yes.
Perfect. So now we're going to go ahead and play this. This is a Friday and this is New York Stock Exchange open. So we're going to play it at 5. So price already made that bottom wick and it's breaking the highs. Is this an entry that we would be willing to take?
I think so, yes, based on everything we talked about.
Okay, perfect. You guys want to check the different time frames too? So clearly we have that bullish volume tapping into that area already. Hourly already creating a support. 4 hour right here is that your break and retest. Do we have the confirmations across time frames?
Looks like it.
Perfect. Is the daily still bullish? Yes, as long as we maintain above 1931. So your entry needs to be above 1931 here, and you're good to go. So as price is pushing up, you want to be looking for an ideal entry here. So same thing that we just talked about from risk management perspective. You should not be taking an entry somewhere up top here and then having a wide stop loss with your TP very, very tight. Your entry needs to be somewhere here in order for your stop loss to be somewhere down here, and then you can tap into this as your full TP or something higher. Make sense?
Yeah.
Perfect. So I'm going to go in. This is a $1,000 account. We're only going to be risking between 1 to 3% on each of these trades. So if I'm going to be taking a trade here and let's say, 2 other people want to take it with me, that's going to be 1% risk per trade. Make sense?
Yes.
Perfect. So I'm going to look for a buy somewhere right there as price is fluctuating. And then stop loss is going to be right below this zone. We can check lower time frames. So even here, if my stop loss is right at this zone here, then that means where does my TP need to be then? At this level or higher? And we can check higher time frames as well. Yeah, so it could be at this level that you just marked off, as long as you're sitting at like a minimum of 1-to-1 risk reward, or it could be higher, which could be up top here. You could check different time frames for this as well. So if I'm going on to the 4-hour time frame, then I know at the very minimum that this trade is going to come somewhere around here, right? 1.5. Or I could target somewhere up top here, that 1944 level. When you go onto the daily time frame, we're making these bottom wicks, we're breaking the highs. Is there anything that's really stopping us to the left from continuing all the way up top here? Not really, right?
Mm-hmm.
So you could use those different time frames depending on how long you want to hold on to the trade. I usually look at the daily and the 4-hour, so that's where I'm going to place my TP. Is there anyone else who wants to take a trade here? If you're on YouTube, you can take a trade with us as well. I'll pause it right here. Nope. All right. And as price pushes up, I'll show you guys how I would be managing my trade. So I currently have about 3 pennies running, so we have enough to take some partials and then also let runners go. So this is pretty much how to grow your small account. Just risking 1 to 3% on a $1,000 account.
Makes sense.
So this is that New York Stock Exchange open volume that's kicking in right now. I can also speed this up just so you guys don't have to come back and watch a 2-hour long simulation session. Do you guys have any other questions? If something doesn't make sense, I'm more than happy to explain it again.
I'm mostly just trying to compare this to like how I would think about it in a real market. I feel like I probably would end up waiting for some form of break and retest around here to continue up. That would still be valid, yeah?
Yes, absolutely.
Even though it's Friday and like all that stuff. I mean, that's not really like a swing. It's
just a day trade.
Yeah.
Right? You could take quick partials off your scalp, and then you have the rest of it as a day trade. When you're like about 50-60 pips into profit, let's see how much this is. So this is about 30, right? When price is passing above this, I have enough room to let this run, if I wanted to. What I tell you guys a lot of times is don't look for a scalp opportunity on a Friday or a swing trade opportunity on a Friday, because after about an hour, 2 hours into New York, the volume tends to die down, right? Majority of the time, unless there's like some news or economic data or anything like that coming out. And then if the volume is dying down and you're not even 50-60 pips into profit, there's no point of you trying to hold on to a trade, right? You're going to end up accumulating swap fees, plus you have the commissions, all of that. So we had a 15-minute close. Close bullish. The next one made a bottom wick. It's pushing the highs. Almost similar to kind of what we talked about on the 30-minute time frame. This one does have a bottom wick though, and left a range for the following candle. The following candle already made a bottom wick and is breaking the highs.
At this point, to see the trade that I would like to take above that level, since we've already moved such a big range, not only would we potentially want to either close above here or maybe close above here and like do some form of break and retest to continue to the upside. Like an impulse trade wouldn't necessarily make sense because of how much it's moved, right?
So you could still have an impulse trade opportunity as long as you get like some form of a retracement down here. And then as price breaks above, you can have an impulse trade up top here. But if this candle, let's say, pulls all the way back down and closes somewhere here, and then the following candles are continuing, then you need to check the higher time frames for confirmations. So that means that this hourly candle needs to close in this zone or higher, and then the next one makes a bottom wick rejection and continues pushing up, and that's your confirmation that this trade is going to continue running, and that's when you can take an entry. The 4-hour time frame, same exact thing. It just started forming as price is pushing up, so you need to see that continued bullish momentum here on the 4-hour as well.
Like that impulse kind of trade would make more sense in the 1 hour versus like 15-minute. Okay.
Yes. Alright, let's see if we continue pushing and how this 30-minute candle closes. If you guys at any point want to take a trade, just let me know. Let me know your stop loss and your take profit as well. Alright, we got a couple of seconds left. Alright, that's that new 30-minute candle right there forming as we're breaking these highs. I'm going to look for some partials here, so I'm going to close, let's close a penny just so we can take some more along the way. And then I'm going to move to break even and let everything else just run. So even these smaller lots, that's legit how you're going to start off in trading. But once you kind of develop your risk management strategy and you're able to analyze, all these little details of price action, growing your account to a much larger balance, and then even if you want to deposit more money later on, it just gets a little bit easier. But until you don't have that risk management strategy down, or all these understanding what the candles are telling you and these price action details, it's gonna be very hard to grow any type of account. So you could legit throw in like $13,000 into your account or $14,000 into your account, but if you don't know how to handle it, it's going to become very, very difficult. So that's why in the simulation sessions, we always try to have like a $500 account or a $1,000 account, because that's usually what, common retail traders start off with. And then try to see like, how do you grow the account, and then just replicate the same thing in the live markets.
Makes sense. In a situation like this, I feel like part of me would start getting discouraged trying to find that setup that I was trying to look for, because it's like we've almost reached. I mean, we've kind of reached it in a way. You know what I mean? I do tend to get confused when that happens, and yeah, I end up feeling like, okay, well, price just kind of left without me.
Well, in this case, you could take an entry on this current candle, right? It is showing you the bullish volume, and let's say you end up taking an entry somewhere here as it's retracing. Where would your stop loss be? Maybe somewhere down here, right? And then where would your TP be? A little bit higher, maybe the same level that I have or higher. Right? You could still take an entry on this, but again, it comes down to understanding what the candles are telling you and being able to read them. The hourly candle here, clearly we've already created some support down here on the 15-minute and the 30-minute. The hourly time frame is already showing you a lot of bullish volume. So is the 4-hour, right? You have that quick little break and retest, and price is breaking the highs. You go on to the daily. The daily is breaking out of this entire consolidation, and it's pushing back up. Where is it headed next? Well, now there's nothing stopping us from coming up to, this 1944, 1945 area. You go on to the weekly time frame, it's in your direction. So you have all the confirmations that you need to take an entry right now if you wanted to. Do you want to?
Yes, but also no, because it's been funny because I've seen this happen in the live market a couple times where, like, I tell myself this is what Sharma would say because I know it's what you would say. But then part of me in the live market, I'm like, this thing is gonna flip bearish, kind of thing. So I have like that fear of like, oh, it's gonna flip to the other side, and yeah, like I'd almost be more tempted to take it now at this second candle. Like, well, it didn't break the lows, did it? No, not really. I think that would make more sense to me. Whether it's more valid or not, I'm not too sure.
Yeah. Or right now, I wouldn't say take the entry on this current candle because we didn't really break the previous highs just yet. But as soon as we do, that's another entry for you.
Could I check what the stop loss and take profit would be? I feel like that's another thing. Like at that point, it's like, sure, it's still valid, but...
Let's say you took an entry somewhere here. Your stop loss would be below the wick of the previous candle, right? Or a little bit tighter, let's say somewhere here around 30 pips.
Yeah.
And then if you have 30 pips of stop loss, then that means your TP needs to be at least 30 pips, which it is. So you'll have just over 1-to-1 risk to reward.
Makes sense.
Let me know if you want to take an entry.
Yeah, I think if it breaks the high, I'll take it.
Alright, I'll slow it down for you. And you guys on YouTube as well, if you guys want to take an entry, just let me know.
It's a after NYSE right now?
This is an hour into New York Stock Exchange.
Right, at this point I feel like it would be almost unlikely for there to be a full body break and retest, like with such volume.
Yeah, probably because we have high volume between New York Open all the way until about 11:30 Eastern time.
Sorry, were you confirming that?
Yeah, I am.
Okay. Yeah. Because a lot of times that's how I end up missing my entry. So I'm trying to practice these kinds of moves a little bit more. I'm just kind of like trusting the analysis and the thought process behind it because it makes sense technically. So yeah.
So let's see, we have just a couple of minutes left until the hourly candle close. So I would just wait until the hourly candle closes here. So that means this 15-minute candle closes. And then if the next one breaks the high, then that's an entry point.
Right. I think I would, in a live market, prefer that a 1 hour type situation for sure. That would be 10 a.m., right? Eastern time?
Yes. Okay. So we're still seeing that bullish volume on the 30-minute, 1 hour, 4 hour as well, and the daily. We got just under 4 minutes left until this candle closes. So at this point, I would just wait and then wait for the new candle to start forming. And then still at the moment, while I'm waiting, I'm still analyzing what the current candle is doing as we're breaking out of this consolidation area. So if this candle closes without breaking the previous high, and the way that it's fluctuating right now, that tells me that we broke out of this consolidation, but there's going to be market exhaustion soon. So either we get retracements or we see consolidation. And usually on Fridays, we tend to see consolidations right before the market closes.
Right. It's Friday.
But that's not to say that you can't catch like quick scalps. You can, but also understand and try to visualize what would be the first step. If price were to reverse in the opposite direction, what are you going to do? Are you going to close 50%? Like, some of the traders do. I know Stefanos closes like 50% of his trade before it hits its stop loss. Or are you just going to close out the entire trade, which is what I tend to do. And that's why my stop losses are very tight compared to other people.
Oh.
Yeah, so it pushed up and then it took us out with TP. So even with 1% risk, we made a 2.76% equity increase, which is like off of 3 pennies. So once you get like these type of, the reason why I pay more attention to the equity percentages increase rather than like the actual monetary value of the trade that I open it up with is because as you grow your account, let's say right now it's like $1,000 account, right? Maybe you see like 20, 30 or like $100 loss. It probably won't affect you as much, right? But when you see like $200, $300 profits, then you're very happy about it. Obviously, when you grow your account to like, let's say $5,000, $10,000, those values are going to grow as well, right? So now instead of maybe being $100 loss, it'll probably end up being like, $500 loss or $1,000 loss. That's going to hit you harder if you don't already develop, some of these mindset quick activities, I guess you could call it. One of them for me is equity percentages. I'd rather look at 3% equity increase on like $1,000 account and then 3% equity increase on, let's say, $100,000 account or like $1 million account or whatever, right? The percentages, when I look at it that way, it's a lot easier psychologically. Because again, trading is, 90% of it is psychology instead of looking at it from the monetary values. Does that make sense for everyone?
Yep.
All right, awesome. So these are our stats here, if anyone is interested. But when we look at our history, it was just one trade, closed partial, 32 pips in, and then we got a total of about 121 pips that was closed by TP. Does anyone have any questions before we call it a session today?
I'm not sure what my question is exactly, but I think it's kind of funny because what just happened is literally what happens to me a lot in the live market. Well, where I will be making sense of things, things make sense, I plan, and then bam, volume goes without me. And I end up not knowing if that's a psychology thing, a technical thing, or I didn't move fast enough thing, you know what I mean?
Yeah.
So I've been having like a hard time identifying what exactly that puts me on. or like how to fix it, or I don't know.
It's
You get
pretty
what I
much
mean?
exactly what we just talked about right now, right? If it's happening to you more than 2 or 3 times, you need to be going back on the chart and you need to be looking at what's happening in that time frame. We've already broken it down to there's always going to be volume between New York Open, New York Stock Exchange Open specifically, and then until like 11:30 a.m. Eastern time. So you have opportunities to catch impulse trade between that period instead of just waiting for like a break and retest. And then you're seeing price just move in front of you because you're not hopping into the market, right? So that's what should be part of your continuous analysis, whether you're in a trade or you're not in a trade, whether your trade is profitable or it's kind of like, fluctuating between profit and loss right now. It's not really moving much. You need to be thinking about what are my next steps. You need to be able to visualize, okay, if this happens, then how are we taking the trade? You know how I legit just drew out like all these bunch of candles, like the bearish candle, like those impulse trades, break and retest for a bearish candle, break and retest for buys, or like, if a candle closes like this, then how are you going to take that entry? Those are the type of questions that you should be asking yourself. You should be able to visualize these type of candle closes because we've seen it so many times already in our simulation sessions, right? We've broken it down so many times. We've seen it in the live markets. When we trade live together every day, like we see these type of things, right? So you need to be able to visualize that and then come back to the charts and be like, okay, this is how I would have taken this trade. So in this case, when we were talking about it, where this candle wasn't breaking the highs or the lows, we talked about how if the following candle broke the high, then you could take the same entry and your stop loss could be here. Right? Those are the type of things that you need to be asking yourself.
Could I take a quick peek at the 1 hour?
Yeah.
Okay. Yeah. Interesting. Cool. What would a valid stop loss be in that case once the 1 hour formed? If you took it off of the 1 hour?
I would still put it right here at this level if you're looking for, so like let's say your entry is here like around 30 pips and then that itself was like around 36 or 37 pips that we talked about, right? So something like that.
Cool. Nice.
The previous candle, this one, it did broke the high at some point?
This one?
Yeah?
No, it didn't.
Yeah, tricky.
It didn't. It just tapped into the same high.
Would you almost say it was easier to catch this move from down there somewhere?
Yeah, that's how we caught it down here. That was our entry.
Yeah. I just mean like in comparison from the two, like.
Yeah, I would
like
probably
if
catch
a
it.
preference.
I would probably catch another one here. And then let everything
Like
else run. Yeah, very doable. Alright, awesome. So I will see you guys in a couple of hours for the trade breakdown or the trade update for the rest of the sessions. But other than that, everybody on YouTube, I hope this was helpful. If you guys have any questions or if you want me to cover anything specific, like a topic, then let me know. Again, either you can comment below or you can reach out to me on Instagram at SharmaFX. But I hope this was helpful. And if there's anything else that you need help